Okay, hello guys. It's Chima here. This is the very first video of a series of videos that I'm going to be making, and they're going to be. I'm going to try to make them as short as possible, and we're going to be discussing very precise concepts on institutional trading. Consider this as the very first and the very what you consider the fundamentals behind what I'm going to be talking about going forward. This is going to be very interesting. Some parts can turn out to be a little bit boring, but it will change the Forex game for you because you get to see things a whole lot differently, and you get to learn a few things. And one of the first things you get to learn is what the Forex market really is and who controls it. Okay, a whole lot of us have been taught the same thing. Okay, from the very beginning, everybody is taught the same thing. I started the same way. Everybody did, and for a while, I had to go AWOL, if you want to call it that, and do some digging. So with a lot of top traders at the institutional level, and I'm willing to show you this. I'm willing to show you something that will change your Forex game, and you won't depend on certain things that a lot of retail traders depend on today. Um, so you also get to learn about the business model of the market makers. Okay, they've got a business model. Forex is a business. Okay, I'm not gonna get ahead of myself now. Also, what you get to learn is why does price move? Why do we have the movements in price? Why does it move? And why 96% or even more? I think the number is higher. Why 96% of traders lose money, and how to win in the Forex market. And you've got to know what the market makers know. You've got to not take the bait. You don't have to take the bait. Don't take the bait. And you've got to do the opposite. Okay. So that being said, we're going to go straight into it right now and show you. So the first question is, the first thing that I'm going to say is that one thing nobody tells you about the Forex market, one thing nobody tells you about the Forex market is, okay, there are three of them. What you already know about the Forex market is false, or at least part of the false narrative of Forex out there. Okay, everything that you know is false, or part of the false narrative. So I wouldn't say it's completely false, but it's part of the false narrative that's very popular out there. And you can't make consistent money. You can't make consistent money from the Forex market. You can't. While you're trading what you know, what everyone was taught, what everybody knows, what's in the public domain is bad. Okay, it's bad. You can't make money from the Forex market going forward. Look, so if you are planning, so okay, I lost some money, I'm going to come back, putting the money, putting the work. I'm going to go back to my charts. I'm going to study these things. I'm going to study the support and resistance. I'm going to go back and study these levels of sensitivity. I may have taught you these things in the past, but I'm telling you today, you can't make money from these things consistently. Okay, you can make a few bucks here and there, and lose them all again. But you can't make consistent money from the Forex market. Trading what everybody knows, you can't do that. Okay. And the reason why you can't do that is because the Forex market is rigged. Okay. It is not a fair playing ground for everybody. It is rigged. It is manipulated on a daily basis, not once in a week or once in a month or once in a quarter. The market is manipulated and rigged on a daily basis. So that's the reason why you can't make money trading what you already know, and what you already know is bad. Okay, it's not totally bad in the sense of being bad, but it is not useful when you talk about consistent money making from the Forex market. It's not that useful, okay, because the market is rigged. So the Forex market, from an institutional perspective, okay, the Forex market is you need to ask yourself, what is the Forex market? Okay. Now, I'm not going to be telling you, because if you're watching this video, I take it that you have been trading for a while, or you're part of my team. You've been trading for a while, and I'm not here to tell you what you were told 4 years ago when you started trading, or a few months ago when you started trading. I don't know how long. I'm not here to tell you the same thing. The Forex market is a place designed to extract millions of dollars on a daily basis from traders, retail traders, okay? Unskilled and poorly informed traders. The market, the Forex market, as you were told, is $5.6 trillion industry or marketplace, the biggest marketplace in the world, is designed to extract millions of dollars on a daily basis from retail traders who are poorly informed about this. And it's done every day, okay? It's repeated on a daily basis. This is done by a network of people who control the Forex market. They control the prices, the moves, and all the money. They've got very deep pockets, okay? They've got money in the hundreds of billions, okay? So if you've got a $100,000 account, a $10,000 account, or even a $5,000 account, you're a kid, okay? Basically, you are an infant in the Forex market. In fact, you are a grain of sand in the Forex market, because we're talking about big players here, people with hundreds of billions of dollars, okay? And you can't beat them doing what you already know. The market is designed to extract millions of dollars on a daily basis. That's what it is, okay? And by a certain group of people. So you compare these people to retail traders out there, they have an enormous supply of money and a sequence of events that they use in getting money from the market on a daily basis. So you compare this to the retail traders, the bulk of retail traders that we have everywhere participating in the Forex market on a daily basis. There are about 5 million of them, 5 million of retail traders who actively participate in the Forex market on a daily basis. And these folks have 10 times, 100 times more money, 100 times more money. I could say 1,000 times, but they have 100 times more money than all the retail traders put together. And they've got really deep pockets, very deep pockets, and they are responsible for moving price. You've probably heard of interbank, okay? When you started trading at first, I don't know which institute you started learning from or the academy you started learning from, but you may have come across the term interbank, okay? You get the interbank rate. You are introduced to the interbank rate to trade the Forex market, okay? They are the market makers, okay? Basically, interbank. They are the market makers. And the key job is to make the market, make price, move prices to different levels, but with the sole aim of creating scenarios that look profitable to traders, okay? They create these scenarios that look profitable to retail traders, so as to soak them, trap them, and move the price again, but in a whole different direction. How many times have you tried to tip? Have you analyzed the market and you did a whole lot of work? Maybe you took close to an hour putting in and marking up those charts, trying to determine where the price is going next. You even brought in the Thebes, the Fibonacci's, you brought in the trend lines, you brought in your knowledge of demand and supply, and you took that trade and you said, well, there's every chance that this is going in my direction. And it's true, you're correct. But how many times have you done this only to come back to find out that your trade is out, okay? You are out of that trade. It hit your stops and it's back up. Okay, how many times have you come to your chart or your trade to look at the positions that you took and you find that price is actually going up? You're like, whoa, I'm in profits. But only to go back and check and see that there's a loss on the dashboard right there. You have been caught out of that trade and price moved back in the same direction that you predicted that it was actually going to go in the very first place. So how many times has this happened to you? So this is the job of the Forex market. I mean the daily job of the interbank right there, okay? I said Forex market. Well, basically the Forex market, like I said, it's designed to extract millions of dollars. So I'm doing this to help you understand, to change your mind and help you see a whole different level, see a whole different perspective about the Forex market. We're not going to be looking at charts. I'm not going to be going into any charts because if I do, your mind and your eyes have been programmed or trained to look at charts a certain way. And if we just go back to charts, boom, you start thinking that way. But I really want to try to get something to kickstart something in your mind that will change the way you think about price action, okay? All of these things and the concepts that you learned in the past, so that when you look at the charts, you look at it like the scales just fell from your eyes, okay? You look at it with the intention to kill, okay? That's just basically what it is. So, like I said before, they are the market makers, and the key job of these people is to move prices to different levels. The sole aim of creating scenarios, okay? The support and the resistance that you see, they don't exist, okay? What I'm saying here today may sound a little bit different from what I have always been saying and what I have always been preaching. Yes, it sounds different and it's a whole lot, it could be a whole lot difficult to take. Support and resistance does not exist. I'm sorry, it doesn't exist. Support and resistance are terms that don't exist, okay? There's no such thing as support and resistance, okay? All right? And the market is not moved by demand and supply and all the things that you already know, the bulls and the bears. Nah, the market doesn't move because of these things. So the aim of these guys, the people who control the market, interbank, I'm going to go farther to tell you who they are. They soak traders in these trades, trap them, and move the prices again, but in a whole different direction in order to get their orders out through the stops, the stop losses that you have, and to clear all the order bonds, okay? This right here is liquidity, okay? You've probably heard of liquidity and liquidity providers and all that stuff. This right here is liquidity, okay, for them, and that's how the money is made on a daily basis. That's how the money is made on a daily basis. You may also call these guys liquidity providers, but what a lot of folks don't understand is that they have to grab liquidity in order to move the market. They need money. They need to put money in the market in order for price to move, and they use the bulk of the money from retail traders. Okay, the retail losses that you see on a daily basis is used to push the price up, at the same time used as a profit. Okay, so in order to move the markets, they need your money. They need to grab liquidity, and liquidity are the stops, your stops. When they trigger those stop losses and you cut you out of that trade, that is liquidity. They need all that. And they have to do this over and over and over and over and over again on a daily basis in order to move the market. And the cycle just continues, okay? They keep doing this. And they do it because they need to make money. They need to make money on a daily basis. The institutions, the ones I called interbank, the market makers, they need to make money on a daily basis. Okay, they don't care who they rip apart. They don't care who the retail trader whose money's being lost. They honestly don't care. They have to make money, all right? And the Forex market is basically owned and controlled by these banks, okay? I just put a few of them together. The more they make up and control what you know is interbank. These five and some others, I'm not going to, they're up to 10, but I'm going to, this is just the most popular five. Okay, we have Citigroup, Deutsche Bank, HSBC, JP Morgan Chase, Goldman Sachs. I'm going to talk about Goldman Sachs going forward. You also have the Bank of America and some other banks. I just want to keep the list a little bit short. Citigroup has a total money share in the market or market share of 600 billion. That's how much money they have in the market. 600 billion dollars, billion with the B, okay? Billion. It's, I think it's about 700 billion. Okay, so 686 or 689 billion dollars in the market. Deutsche Bank controls about 9%, Citigroup 12%, Deutsche Bank 9%, HSBC 8.9%, and it goes on and on and on. So these guys have very deep pockets. They have money in the hundreds of billions, okay, that they use to trade. Okay, that's how much money they use to control the market. Okay, these guys. So you can call them liquidity providers, whatever you want to call them. I call them the market makers. Okay, I had to sit with the top traders at these levels, you know, trade differently, get more information. And if you are watching this right now and you disagree with all I'm saying, it's okay, it's fine, it's good. If you're doing something in the Forex market and it's working for you, please go ahead, okay? Otherwise, if you have been losing money, trading consistently and losing consistently, and you just keep putting back some money and refilling and giving these guys your money, then you need to listen to what I'm saying. You need to pay serious attention to all that I'm going to say. And I'm not going to say everything here because I'm trying to keep this short. I'm going to go ahead. We're going to have a series of videos. A lot of them are going to be boring, like I said earlier, but you have to pay attention if you really want to change this narrative. And a lot of them are not going to be things that you have heard before because it's a whole lot different. So the question is, why does price move? Why do we have price movements? A lot of traders out there think that the price moves can be attributed to two forces in the market, which are the bulls and the bears. But I'm sorry, this is false. This is not the case. Okay, the bulls and the bears, for them to believe that too many buyers than sellers will push price up, and vice versa. When you have too many sellers or too many people going short, then the bulk of traders going long, that price is going to go down. This is very far from the truth. Okay, it's very far from the case. The real reason why price moves. Okay, there are at least 5 million active traders in the world who actively participate in the Forex market. And even if all retail traders started buying or started trading in one particular direction, it won't be enough. All the money put together of all retail traders in the world won't even push price by 50 pips. Okay, that's how serious this is. Okay, so you start asking questions right now. You need to start asking questions right now. So when we started trading, we were told that, well, you really want to trade in. Now I get to see a whole lot of lies that are circulating over and everywhere, you know, on the internet, where, you know, new traders, beginners are told that you want to trade with the crowd. Okay, what they're telling you is you want to have your money taken together with the crowd. Everybody's money just been taken, okay, basically. So what you are doing is trading with the crowd. I say don't trade with the crowd, okay? Don't. All the money in the all the retail traders in the world put together. If we all started trading in one direction, price won't even move a cool 50 pips. Okay? All right. Now, that's to tell you that market movements are controlled by the smart money, the institutions, the banks, or the market makers. Okay? Some folks may say, well, the market makers are not interested in the direction of the price. They don't move price to these directions. They are interested solely in something totally different. Okay, if you say so, you can keep saying that. But what I can tell you, what I have seen, is that these guys are responsible for the price moves that we all see. They create the so-called opportunities that traders are looking to trade, and sometimes, you know, sometimes they let us win. in order to keep us in the game. They let us win. They literally intentionally let traders win some of the times. Okay, you have taken trades and you know, boom, you hit profit. You hit your take profit. No matter how you took it, you feel really good and you feel, well, I can still go. It's just such a short time before I go back and make more money. And the next time you go, you know, it comes with a whole lot of excitement, and you really want to keep going. You even feel like putting in more money and, you know, increasing your balance so you can trade higher lot sizes and make more profits. Okay, this happens to a lot of traders. You know, how many times have you just made profit and you feel so excited and you just want to trade? That's just that's how it is. Okay, when you make so much, when you make some profit, okay, yeah, money that you haven't made in a while, you just made that amount of money. You see profit reading on your screen. It's a really good feeling. I mean, it's the best feeling a trader can have, and you get really excited when you go ahead and close that trade in profit. You're really the psychology right there is, what is the next one? Where is the next trade? I really want to trade. I need the next trade. I need to trade something right now. And that is the mentality that a lot of traders take. And boom, the next time the market takes it all away from you and even more. So they do this to keep a lot of traders in the game, and a lot of traders don't suspect what's going on. You know, I had at some point in time, I had a trader friend, a friend of mine who we all started, and you know, this was at the early years, during the early years of my trading experience, and we were all trading, and he came out to me and said, "Look, I don't think this stuff is real." He said, "It looks like someone is really controlling this price because each time I take a trade and everybody's doing the same thing, it moves in a particular direction different from what everybody's doing. I think someone's really controlling this thing." And I said, "Look, come on, man. You can't be possibly correct. You can't be possibly sure that someone, this is because you haven't sharpened your skill set so much. That's the reason why you think this is happening." But he was right. He was right. And he left. You know, it's so sad that a lot of traders lose so much money, and after losing so much money, they decide, look, this is just enough. It's not for me, and I'm going to do something else. And they never find out why. They never get to find out why they lost all that money. Yeah, I think that's the problem. They never get to find out why they lost all that money. If everything that they were taught is correct or was correct, why were they losing money? Well, a lot of things come together. You know, a lot of topics like support and resistance, trend lines, demand and supply. And, you know, these things do not really hold. This is because the price levels on the charts are created for the same reason, just to extract money from traders. The charts that you see and you're focusing on it, they want you to focus on it. They want you to focus on demand and supply. They want you to focus on the trend lines. They want you to focus on price sensitivity levels. Of course, all these concepts that we have looked at in the past are very useful if applied the right way. Okay, you need to just change your mind at the end of the day and look at price the way they look at it, and have the market maker's business model up here in your mind, and it will really change the way you trade. So price moves are not really controlled by support and resistance and trend lines, demand and supply, and all these other things that, you know, price channels. You know, these things are carefully planned. Okay, and I'm going to go deeper into it. Okay, I'm going to go deeper into it and tell you some of the things. And all this, like I said before, is to help you trigger something in your mind and help you think differently. And I'm actually just creating a rebel. Okay, I want you to rebel against the system, rebel against what you already know, and don't hold it anymore. Don't take it as it is something really big. Because look, I'm going to be really sincere with you. If you really want to make money going forward, I don't mean make money today and lose it back tomorrow. I'm talking make money consistently from Forex. You have to really change these things. All of the things that you have learned, all of the things that I even taught you in the past, these things don't hold. They don't hold. They are not correct. They are not the exact reason why the price moves. Okay. If you really want to leave on the proceeds of Forex, then you really have to change this. And this is why I'm here. And I'm going to be going forward with this. So you may say, you said the price, the market and the price moves are not controlled by the bulls and the bears. It's not controlled by the bulk of buyers or the bulk of sellers or demand and supply. So what about the news? What about the news release and all these press releases, the economic data on all these from all these countries and all this stuff? What what's behind that? What's behind these price moves? Yeah, I'm gonna go into it. The so-called news releases that move the market violently are all part of the game. It's all part of the game. Uh, the banks have carefully planned this. Okay, I'm going to go into it, and it's part of the game. And very useful tools used in inducing traders to trade, because a lot of folks think that, okay, a lot of folks used to ask me, don't you trade the news? Because they look at it as mailbox money. Okay, you can just go in, boom, gamble your way into thousands of dollars, and whoa, you're like, boom, this way. That's the gambling mentality, and that they want you to have. So when you hear that, oh, we're gonna be having the non-farm payroll release this Friday, you feel like, wow, it's a chance to make money. I mean, you want to go to my 15-minute chart and just put my buy stops and my sell stops, and even if the numbers are positive, I'm still expecting price to just go in any direction. If you look carefully at what you just said, or listen carefully to yourself, you realize that you honestly don't know where price is going, and you are just gambling your money away. And a lot of times people do these things, they make some money, they do, honestly, but you are fulfilling what they want you to do. You are actually doing what the people who control this whole thing want you to do. They want you to put your money, they want you to trade the news so they can take it. Yes, sometimes you can be right and you can make money, but that's just one of the things that happen when people gamble. You can make money, but you just keep doing it throughout that night and see who goes home with the money. The house will take all that money back from you. So that's what the Forex market is all about. Okay, so until you know how they do this, until you understand the market makers game and the market makers business model right here, you're not going to make money. Okay, you are not going to make money consistently trading the Forex market, whatever it is you're doing. Okay, with all the fancy indicators and all that stuff, boom, it doesn't work. Okay, until you understand what they are doing and you can actually look at the charts differently, it will be really eye-opening when you look at the charts and you can just see what they did at different levels, and you can now see what they are going to do. Actually, before the news releases are made public, these guys already know the digits, they already know the numbers, they already know the outcome, they already know where price is going to move, because they are going to move prices in that direction. So they already know what's going to happen. Okay, and they are going to move price in the direction that they want. How many times have you seen a negative non-farm payroll result or release, and then price still goes up for the euro, for the dollar? Okay, the price still goes up, and you're wondering, this is very negative or this is very positive, and price still goes down. It is because this whole thing is controlled. It is controlled. It's not random. You can attribute some fundamental reason. It's part of the game. I can tell you that it is part of the game. And you may be wondering and asking, what about these the non-farm payroll? I already talked about that. The unemployment rate, the FOMC, the ISM manufacturing, etc. I'm not going to mention all of these things, but It's part of the game. It's part of what they do. It's part of what they want. The popular belief is that these public news releases cause a lot of traders to get into the market, the bulls and the bears. And if there are more sellers than buyers or vice versa, the price moves in a certain direction, favoring the demand or supply, right? This is what everybody's told. But guess what? It's a lie. It's false. It's not correct. At least demand and supply to some level is close to the truth, but it is really analyzed the wrong way by the majority of people out there. So the belief is totally incorrect. And the banks already know the figures, the data prior to the news releases. In fact, they already know where the price will head because they will make it happen. As Ari stated, they need to give traders reason to participate. And the news, these economic data is all part of it. It's all part of the game. It's all part of what they do. It will really surprise you to know what is at play right here because it goes really deep. It goes really deep. It's a whole lot deeper than what you expect. I'm not going to go into all that because it gets really dark when you start going there. You may say, well, the banks don't have all that power to do all these. Yes, the banks don't. The banks that I mentioned here alone do not possess such sway to control the world because that's what they're doing. They don't. So this tells you that there are hidden hands, the people who own the biggest banks in the world. So the question you should be asking is, who owns the bank? Think of a bank like, okay, I'm going to use Goldman Sachs. A bank like Goldman Sachs, or think of a bank like Citigroup, a bank like HSBC. The question you should be asking is not just the bank, who owns the bank? Who owns the bank? These are some of the most vicious people in the world. It gets really dark, and I'm not going to go into it. I'm not going to go into all of that. And for a lot of them, instead of outright war, why not create currency wars? That's why you have Forex. Why not create currency wars that force the heads of various governments to respond through various policies, be it fiscal or monetary policies, hence the news releases and all these things? Because if you don't fight this war with them, your country will suffer. I'm telling you, your economy will suffer if you don't fight these war, the currency war with them. Okay, so all of these guys are talking heads, the people who come up with all these news and all. This is what I believe right now. So if it may sound like some kind of conspiracy because, well, that's what it is. It's deep and it's dark, and I don't want to go into it. I just want to go into the part that we want to talk about. Okay, so there are many reasons for this currency war, and it's a whole lot dirty. And at the end of the day, retail traders suffer. They get their money taken. They got ripped apart every single day. So that's just that. So the question now is, why do 96% of traders lose money? Okay, why do 96% of traders lose money? This right here is a very big question, and you may have heard a whole range of answers to why more retail traders lose all their money, ranging from poor education, impatience, mentality / mindset, the strategy and whatsoever. Yeah, just name it. A lot of things. Okay, and they're all correct. At least they're all part of the reasons why retail traders lose money. But one very important thing, the most important or the biggest reason why we lose more as retail traders is because the market was designed to rip retail traders apart. It's really simple. Get it into your head. If you don't get anything from what I've said in the past 20, 30 minutes, get the fact that the market is designed to rip you apart as a retail Forex trader, okay? You don't have the money that these guys have. When you put your money, it goes into the market. The liquidity providers get this money. This is what they need to push price. The market is created to extract millions of dollars on a daily basis. And if you are a retail trader, you are a target. Okay? I'm not discouraging you from trading. I'm only telling you and letting you know what this is going forward. So when we start, your mind and your mentality shifts. There's going to be a really big shift. You start thinking like the predator instead of the prey. You don't think of running away. You think of who to kill. I'm sorry. It sounds a little bit. It sounds a little bit violent, but you think about who to kill. Okay, because it's a kill or get killed place. You either kill or you get killed in the market, in the Forex market. Okay, so the information out there is incomplete. Okay, that's just the bottom line. The information out there is incomplete, and the most comprehensive ones are the fool's narrative of the Forex market. The most comprehensive information you can get about the Forex market, from the tutors and from the wherever it is you learn from, they're a little bit false. They are the false narrative. So the public information, everything you know, is a direct opposite of what the banks do. And that's why more traders lose money. If not, let me break it down this way. If prices were affected by the number of traders who were buying or selling at a particular time, then it means that more traders are going to make more money. Okay, so let me explain. If the bulls and the bears really control price, okay, more bulls price goes up and more bears price go down. The same way we've been taught, if this really controls price, everyone's going to make money. So who loses? That's a question. All right. So who loses? A lot of traders are going to make money. So who loses? Someone has to lose. Okay. Someone has to get taken out. All right. So that tells you that the banks are doing the opposite of what everybody's doing. Okay. The majority of traders are doing one thing, and those who control the market are doing the opposite. That's the reason why retail traders lose money 90% of the time. Okay, so I'm going to give you a figure. There are about 160 or less than 150,000 people who trade consistently and make money. You think about that. Less than 150,000. I think that's even a lot. Okay, out of 5 million who trade the Forex market. I'm talking about retail traders right now, less than 150,000. I think it's 100,000, So why we lose is because what we do is very popular. The information out there is popular. The information on YouTube, the information on just the textbooks, everything. And the banks are going to they all know this. They know what you know as a retail trader. They know what every retail trader knows. They know that you're buying at bottoms. They know that you are buying at W's. They know that you are selling at the formation of the M's. Guess what? They created these things so you can do that. And they know that. They know where they know where all the orders are sitting at. So invariably, they know where all the money is. They know where all the retail traders' money are going to be lying. And so what they do is, okay, we're going to come get it. We're going to come get it. Okay, we have that one. We're going to come take everything. And so they take everything. Okay, so in order for you to be part of the 4%, you have to be different. You have to do the opposite. You have to do you don't want to be popular. You don't want to be buying when everybody's buying. You don't want to be selling when everybody's selling, because when starting, that was what we were told. You don't want to be doing that. So what I'm saying is, I'm kicking away everything you've learned. Basically, yeah, I'm kicking out every single thing you've learned in the past. I don't know how long, but I'm kicking everything away. You may have made some money, but the question I want to ask you is, have you made more than you have lost trading Forex? Unless you have. Okay, I have made more money. I've made some money, but I don't consider it money anymore, because I sat with some of the biggest traders who make millions of dollars on a weekly basis. Okay? People who make real money on a weekly basis, millions of dollars in a month. So your few $100,000 is nothing compared to these guys, or your $10,000 weekly profit isn't money. So, guys, this is the reason why we lose money as retail traders. We do the popular stuff, and the banks do the opposite of what we do. So, you want to stay away from the popular stuff. You want to stay away from the popular information. When everybody's buying, you don't want to be buying. Everybody's really buying. It's a sign that you don't want to be buying. Okay, and I'm going to show you how, because I know you'll be asking questions now. So how do we do that? I'm not going to show you here. Going forward, I'm going to show you how to look at price. I'm going to show you how these traps are set. I'm going to show you what the market makers are looking for and what they're looking to do, and you can actually be on your way. It would be a little bit boring going forward, like I've been saying ever since, but it will be worth it. And it's gonna change your trading. I'm not promising you that you're gonna make money. I'm not doing that. But what I'm saying is, what the fact that you make money or not depends on you. You are gonna decide that, okay? And it depends on how you take what we're doing, how serious you take this going forward. So the popular information is bad for you. The banks know what every retail trader knows. In fact, they promote and support a lot of Forex educators out there to keep teaching these very popular topics. And it's us versus them, okay? You as a retail trader with all the information you have against people with tons of mathematical genius behind them, okay? Guys with tons of degrees in computer science, tons of degrees in mathematics, and you as an unskilled retail trader against these guys, okay? That's what it is. On a very good day, when a pattern is seen, every retail trader is taught and trained to see price in a certain way, and a lot of traders do the same thing. We just do the same thing. 66% of traders are going long on the Euro USD, and 34% are going short. Everything you've been taught tells you that since there are more buyers than sellers, price should go up. But like I said, the exact opposite happens in the market, or else majority of traders would be profitable. So when you see, there was this app that we used to trade with a few years back, and it would show you the number of people who were buying, on that platform, okay, that particular platform. So when you saw maybe 60% of people were buying the euro dollar, you want to go ahead and buy. This is one tool. This tells you this is one tool they use to take your money, because you believe that if too many people are buying, the price is going to go up. The bulls are taking the market. The bears are taking the market. Okay, buying pressure is increased. Nobody controls the market except the market makers. Get that into your head. Nobody. Okay, the bulls don't do it. The retail traders don't do it. Don't have all the money to do that. Okay, the institutions are responsible for moving price in a certain direction. So this is what I want to talk about today. I really hope that you would be looking at price differently now. And when we go into the next video, I'm going to start by helping you understand a little bit of something about price action and a few things that I have discovered and how it can help you going forward, help you to look at price differently. So we're going to take this one step at a time, but this is a time for you to relearn and unlearn a lot of the things that you have been using for a long time now. And I can assure you that you're not going to make much progress going farther with these information that you have. So you have to put them aside and learn something new, okay? That's really going to help you and help your trading. I'm not assuring you that you're going to make money if you follow this. I'm telling you that what your success depends on you and how serious you take what you are told. So this is going to be it for today. And I want you to go back and think about what I just talked about here, and look at price differently. Take all of the euro dollar, the dollar pairs, the 8 major currency pairs that we all trade. This is an assignment. I really want you to do this. Go back in the next 7 days, take all of the US dollar pairs that put them together and look at the areas where you are going to buy. Okay, go back sometime in history. What would I have done? Okay, I don't want you to do some kind of cherry picking. What would I have done here? Okay, I would have bought. Okay, the idea and everything that everybody knows is we buy here. The M's and the W's, the heads and shoulders, and all of this, the trend lines. Okay, it is retested. I want you to just go back and study it and look at what happened after that, and count what would the success rate have been if I followed all these things that I already know. Okay, and we're going to come back and I'm going to look at real price action and how the banks look at price action. Okay, and how they really control it. It's not going to be in one package. It's going to be scattered across different videos. So I'm going to see you there. But in the meantime, take care, guys, and don't lose your money.